G'day everyone. My name's Domenic Carosa, founder and chairman of Banxa. Welcome to today's webinar. And what I'd like to do is to take you through the company. I know there's some, I'll call it some newbies on the call. And what I'd like to do is just take you through the Banxa business for a couple of minutes, take you through some of the overview with regards to some latest announcements, and then open this up for as many questions as possible. And if you've got any questions on the Zoom box, there should be a button to be able to ask questions. So feel free to ask questions as we go along. So just sort of moving forward, what I'm going to do, I'm going to just share my screen and just basically give you a quick overview of Banxa and what we're doing and how we're doing it. So as a bit of a recap, Banxa is listed on the TSX-V, code BNXA, and the OTCQX BNXAF. Our vision at Banxa is really about bringing digital assets to every part of the globe. And how do we do that? And how do we operate and what we do in the space? So first of all, we're actually the world's first exchange-listed fintech, PSP, payment service provider, and RegTech company specifically for the digital asset industry, or sometimes called the cryptocurrency industry. And what we are doing is building the bridge, the payments and compliance bridge between the fiat world, and when I say fiat, I mean US, Euro, Canadian dollar world, and the digital asset world, meaning Bitcoin, Ethereum, and all the other coins. We do this through what we call the fiat on-ramps, as well as the fiat off-ramps. Our business model is B2B focused, and we operate in a regulated space. And I'll talk more about rules and regulations as we go along. And most importantly, whether the price of Bitcoin goes up or down, it's good for us. We clip the ticket, and I'll talk more about how that works. At a very high level, we do 4 core things across payments and RegTech. First of all, is that we bring together a number of both global and local payment methods. And when I say global, I mean MasterCard, Visa, and Apple Pay. And then local payment methods being Interact in Canada, Sepia in Europe, Poly in Australia, and the list goes on. We then wrap that with our regulatory and compliance layer. We call that our RegTech layer. Where we do not only full AML KYC on our customers, but we also have multiple digital asset licenses around the world, because to operate today, you need to be licensed. And then point 3 and 4 is really about our own proprietary technology stack that runs the entire business, from data pricing payments to ultimately delivering the coin to the customer in the most efficient way, whether it's on-chain or off-chain. And I won't get too geeky and get into the nuances, but effectively, it's just efficient and cost-effective for the customer. And then what we do is that we wrap all of that into an API or a widget, which is just another name for a technical connection into global exchanges like Binance and OKX and Huobi, and the list goes on. And we have about 70 B2B customers to date. And then one of the ways that we measure performance in the company is through a measure we call TTV, total transaction value. And as you can see, for those that can see the screen, we did just shy of 300 million in the June quarter, which was up from 200 million in the March quarter and up from 100 million in the December quarter. So some reasonable trajectory there. And the key catalysts with regards to growing the company and growing our TTV are building out more customers, adding more customers to the platform. There are thousands of global exchanges and wallets in the marketplace, and we've got 70. We're really targeting the top 300 to 400 wallets and exchanges in the marketplace. Then adding more crypto licenses or digital asset licenses, as they're sometimes known around the world. And then adding more payment methods, and our target markets are LATAM, Asia, Middle East, and Africa, because we already have strong penetration in North America, Europe, and parts of Australasia. and then expanding the number of coins, and then verticals in DeFi and NFT. So they're really the key catalysts in terms of growing. And so that's kind of the, let's call it the high level overview of what Banxa does as an organization. Now, what I'd like to do is the next 5 slides are really taking you through, and I just want to give a bit more color to the announcements of the last month and a half, just to kind of talk about how that fits into our overall strategy. And so this one that we actually announced on the 21st of September was really adding sell function, the sell function, or sometimes called the fiat off-ramp. In my view, this is a very important positive step for the organization, because what it allows customers to do, on one hand, we can onboard customers. We go fiat on-ramp, so US, Euro, Canadian dollars, Australian dollars into Bitcoin, Ethereum, and other coins. And by having the sell function or the fiat off-ramp, we allow customers to basically go and take their cash, have crypto and convert it to cash, because some customers do need to do that because they've got things to do with cash. We've launched it across 3 currencies. As we've mentioned previously, we'll be adding US, Canadian, and multiple other currencies. And the reason this has taken a little while, because some of the questions I get from investors is, well, why couldn't you just have sell function from day one? First of all, there was more demand for on-ramping, which makes sense. As the market is now maturing, there is certainly now a demand for off-ramping, so fiat off-ramping or sell functionality. To do this requires extra both compliance steps as well as technical steps, and I'll sort of take you through each of those. First of all, to be able to do that, we need to get the approval of the regulator, which we have done so in a number of territories, that allow us to turn on the off-ramping or sell functionality. 2, as part of that compliance requirement, there are a number of things that we need to do. For example, if someone is selling us a coin, we need to check for the provenance of that coin and that wallet to make sure it hasn't been used for nefarious purposes. That's just one of a number of extra steps that we need to conduct. And so what you'll see over the next 3 to 4 months are our partners turning this function on across their exchanges. And we haven't made any forecasts, but if someone was asking me, my view is this will make a material difference to TTV. That's the expectation. In terms of the 9th of September, we announced our volume of 78 million, which was an increase, obviously, year on year, and an increase from the prior month, as well as adding a couple of new partners. Now, just for the record, we don't announce every single partner that we sign up. We only announce partners that we think will be in some way material or are strategic to the organization. I know I've also had feedback, there are a couple of other companies that will announce every time they sign a partner. My view is if it's not material, we actually will not announce it. On the 7th of September, really as part of the strategy of growing the organization, we added some extra expertise. My view very strongly is if we want to win the gold medal, we need to add gold medal athletes to the team. And so we've basically brought on 3 new people over the last couple of months. And that was Chloe, who's basically chief of staff, and she's ex-Google out of Asia Pac. Given that compliance and regulation is so critical to the organization and to the growth of the ecosystem, we've brought on Stefan, who's head of compliance in EU, and he was formerly head of compliance at the Luxembourg Stock Exchange. And then Richard, who's our general counsel, and he's previously with Western Union and Lloyds Bank. So it's really strengthening the team with gold medal winning athletes, as well as adding a new website. And some people would have seen our new color scheme. And at the same time, we're also focused on delivery, providing what I call fanatical customer experience and support. And our objective is to basically deliver 99% of orders within 20 minutes, which is actually would be one of the highest conversion rates in the industry. On the 31st, part of our catalysts And on the 31st, we kind of added to that. We added 17 new coins to the business. We right now have just shy of 40 coins to the platform, as well as added a new payment method, SEPA Instant. And for those of people who are in Europe or are accustomed to the European payment system, SEPA previously sometimes took hours or the next day. And what SEPA Instant does, it will give you instant access, either onboarding or offboarding. And because I think these days people are very much requesting and needing that instant gratification when it comes to crypto. And then on the 19th of August, we provided a bit of a financial overview. We work on a 30th of June fiscal year, just to be clear. And what we provided was some unaudited results, just to give the market a bit of guidance. The full audited results will be out towards the end of October, well before the due date. And just to give you a high-level overview, we had just under $700 million of transactions for the financial year, which was up over 700% year on year, which we're very pleased about. Our expected revenue is well in excess of 40 million, ranges between 40 to 45 mil, and it's unaudited. So we will obviously be locking down that number to the dollar, which was up over 500% year on year. And we had a very strong balance sheet with over $24 million in cash and cash equivalents. We made a loss, excluding public company costs, of about $1 million, which was as expected. And then we talk about our July TTV and our B2B growth. And given that it was from the 19th, we've obviously added to our TTV and added to our B2B customers. So that's really let's call it a bit of a high level overview. And what I'm going to do now is look for some questions that people may have. So feel free to basically type in your question. No question is a silly question. And feel free to basically ask away. James asks, why is, let me ask, what's the difference between local payments and global payments, and why is it important? That's actually a very, very good and very important question. And this is one thing that differentiates us from most of our competition. So most of our competition actually offer credit card only. And what I mean by that is you can just use your debit card or your credit card. Credit card is inherently expensive. It's 3 to 6%. It's not us, it's the industry. It's just an expensive way to pay. And if you're buying maybe a couple of $100 worth of crypto, you don't mind paying that kind of percentage. But if you're buying $1,000 or $10,000 worth of Bitcoin, you want to use a local payment method as opposed to credit card. And in order to be able to offer local payment methods, you need to have a local company in place. Once you have a local company in place, you then need to have effectively the right licenses in place to operate in that particular territory, which then means having people on the ground, compliance people. So effectively, there's a bit of infrastructure required in order to be able to offer local payment methods. But the reason local payment methods are important is that, for example, in Canada, using Interact, as most Canadians would be accustomed to, literally costs pennies in the dollar. So it's a very cost-effective and fast way in order to basically transact with Banxa. And that is one major difference between ourselves and our competitors. Ali asks, what makes Banxa unique to other PSPs? One is obviously the both global and local payment methods. That's a major point of differentiation. And also at the same time, he asks, can you expand on your RegTech offering and upside there and timing? So today, Banxa has access to 5 different licenses around the world. That is Australia, that is the Netherlands and Lithuania, which covers Europe, Canada, and a partner through the US. We are now in the process of acquiring more licenses around the world. It's not a process where you just turn up one day and you get a license. It's a process. And just to give you some insight, our license in the Netherlands, that was almost a 12-month process. It's basically almost like getting a license to run a broking firm or an electronic money institution. It's actually that intense, both from a commercial compliance as well as from a technology perspective. And that's and if I take out 2 or 3 main competitors in the space, in fact, we have more licenses than all of them put together. And this is, in my view, a major point of differentiation. And over the next 12 to 18 months, we have a very strong roadmap of acquiring many other licenses around the world. Now, as the industry becomes much more regulated, and just if you were asking me, what does the next 3 to 4 years look like? What is a gold standard from a licensing perspective? What that will look like, in my view, and I'll take the Netherlands as an example, is if an exchange or a wallet provider or a DeFi service wants to target and deal with a customer in the Netherlands, they need to have an exchange license and a custody license to be able to legally operate in the space. And that's one of the major points of differentiation between ourselves and our competitors, is that we are taking a regulatory first approach, which in my view helps build a moat around our business. And all I'll say is just watch this space with regards to further licenses that we will be announcing over the next little while. Raymond asks, any chance to calculate and show the PE ratio of Banxa at this time? Well, Raymond, as I mentioned, for the 30th of June financial year, we made a $1 million underlying EBITDA loss, which excluded public company costs. And that was because we listed the company in January this year. So there were a number of costs associated with that. If you go back and look at our March quarter results, we actually made $1 million EBITDA underlying profit for that particular quarter. But just to be, once again, fully frank with everyone on this call, the objective now in the short term is to reinvest any extra profits that we make straight back into the business in terms of acquiring more B2B customers, adding more payment methods, adding more licenses. There is a significant land grab opportunity which we're focused on. My view is the time to move into what I call the harvest mode is when we're doing not 200 or 300 million transaction volume per quarter, but when we're doing $2, $3, $4 billion worth of transactions per quarter. At that point, you should expect the company to be very profitable. Gavin asks, are you targeting any buyouts of smaller firms, etc.? Gavin, right now we have our hands so full from an organic perspective. We haven't really focused too much time on acquisitions. That I think 2022 we will have, let's call it, more bandwidth in order to be able to look at acquisitions. And what I think that will look like, once again, if you're asking me to look at 2022 and 2023, that would be trying to find companies that may be very local. For example, they may have a license in Brazil or in Mexico or in Thailand or Indonesia. And what we could do in that instance is that we could acquire the company with the appropriate licenses, then plug that into our platform, into our infrastructure, and then allow all of our customers to effectively actively target customers in Mexico or Brazil or Indonesia, etc. And that's really the leverage in the model. The other example there is, as we turn on a new payment method, for example, we just turned on SEPA Instant, all of our customers are able to then turn that on for their customers. So we kind of get this leverage effect every time we add a new coin, a new payment method, or a new license. Gavin also asks, do you have to market, advertise to get your name out there? Is there a marketing strategy for your local global markets? And so he says, thanks a ton, Dom. Super excited. Thanks, Gavin, for those kind words. So in fact, we recently brought on a new CMO, coming back to my gold winning team. And we brought on a new CMO who was big ASX Australian Stock Exchange listed company called Marley Spoon, one of the co-founders there. He's joined us as CMO. So you will see much more marketing and promotion coming from Banxa. But given that we are a B2B business predominantly, it's really, we work with our partners because we are very much embedded within multiple exchanges around the world. But we will basically be increasing our visibility because that will actually help bring new customers to us. At the same time, from a marketing perspective, we work very closely with our partners. In fact, I think today there was a promotion that we're running with KuCoin, win 1,000 USDT every day type promotion. And so from that perspective, they're the kinds of things that we will continue doing in terms of visibility. One of the other questions I get, Gavin, as well is sometimes, how do we actually get our B2B customers? And one of the stories that I like to basically share to illustrate this point, I think a quarter and a half ago, we announced Trezor. Trezor was actually the first hardware wallet in the world. And when I say a hardware wallet, it's a cold storage wallet. Now, the reason we signed up Trezor, or they signed us up, or we joined together as a partnership, is when you buy a hardware wallet, you start with 0 Bitcoin or Ethereum or other coins. And so by adding Banxa, it allows those customers to effectively add Bitcoin or Ethereum or other coins directly into their cold storage wallet, into their wallet. And as soon as we did that, we announced it via the TSX Newswire. We announced it via Twitter. Literally within 24 hours, we had a number of competitors of Trezor contact us saying, we've just seen what you've done for Trezor. Can you do the same thing for us? So really, I'd say, at a high level, 50% of what we do is go out there and acquire customers. The other 50%, they come to us because everyone's watching everyone these days on Twitter and across social media. I've got a couple other questions. Spencer asks, what are you seeing and how are you thinking about the very dynamic regulatory landscape across the world and any potential new licenses in the works? So firstly, Spencer, yes, we have a number of new potential licenses in the works. I would rather not say where they are until we've actually received them, but that is an absolute core part of our strategy. The regulatory environment is very dynamic and it's changing often. But my view is rules and regulations will only continue to increase in importance. And just to give everyone a little bit of context, why we're actually pro-regulation that is fit for purpose is just to sort of go back a couple of years. In 2017, out of Australia, we helped form an association that actually lobbied the government for regulation. And 6 to 12 months after that, we actually Banxa received one of the first licenses in the world. In fact, Australia was the second country behind Japan to actually issue licenses way back in 2018. So we've run a regulated company for a number of years already. It's very much part of our DNA. And as regulations become tougher, you would have seen, you only need to Google regulatory challenges in the crypto space to actually see that there's been a number of exchanges around the world that have been called out by regulators. I've had questions from shareholders saying, is that good for us or bad for us? Every time I see that, that is music to our ears because it just makes us much more important and valuable to our exchange partners. So as the rules and regulations around the world become tougher in terms of that landscape, that makes Banxa more important because we are going down a regulatory first approach. We have a number of licenses already. We are in the process of acquiring more licenses, both initially organically, and we also will look at it from an M&A perspective to really accelerate what we do as well. Now, I've got another question from Andrew. Is all transaction volume from new B2B customers categorized as agency transactions, or do some transactions from B2B partnerships come through as principal transactions, which we clip the ticket. Without wanting to bore everyone with accounting standards, and effectively the way that we account for our revenue, and then I'll give everyone an overview of how I think the market should really look at us. The way that we account for revenue can either be on an agency basis. So if we go and sell a coin for, let's call it $1,000 worth of Bitcoin, we would account for agency, which is, let's call it 4%, just to pick a round number. And we would account for that as our revenue. When we work on a principal basis, and the nuance here is if we have a coin on an agency basis, we send it from our upstream provider directly to the customer, say Binance or Huobi or KuCoin. However, if that coin happens to touch one of our internal wallets or nodes, we, from an accounting perspective, need to account for that as principal. It's purely because accounting rules have not caught up with blockchain and crypto. And so our revenue is really a mix of both agency and principal, and it varies month to month, quarter by quarter. So really the best way to judge the performance of the company is to look at TTV, total transaction value. That's really the first thing you should do, is, how is TTV going? The next thing, just as let's call it I'm going to just give people round numbers. This is not a forecast or anything else. I just want to give people a bit of a flavor of just how to, let's call it a back of the envelope type analysis, is take TTV, take 4% of that TTV, and basically think of that as our gross revenue. Then take 50% of that, and that would be our net revenue. And the delta are basically direct fees like credit card transaction fees and other related fees, AML, KYC fees. And then from that net revenue below, you've got employee costs and SG&A. That's really the easiest way to really break down the business, and really the most important measure in terms of how the company is going is basically TTV. Spencer also asks, also any update on the direct enterprise integration rollout? And so just to come back to the whole, let's call it the regulatory landscape, I'm going to call it our Horizon 1 business model has been to bring together a series of payments wrapped with regulation across our platform, and us being able to deliver that coin directly to the customer. And just to, once again, just to sort of unpack that and give people a bit more context, just say you log onto KuCoin. You're a brand new customer on KuCoin. You start with $0 in your wallet. You click on Banxa. Just say you want to buy $1,000 of Ethereum. We take you through an AML KYC process. If you're in Canada, you can pay by credit card or Interact. Or if you're in Europe, you can pay by SEPA or a local payment method. You click a few buttons, and then literally a minute later, you will have Bitcoin, or in that case, Ethereum, sitting in your KuCoin wallet, ready for you to start trading and doing whatever you want to do. And that's really revision 1 of our product. What we're now working on, we internally call that our enterprise product, where we're effectively unbundling this, because we've had demand and interest from some global exchanges that don't want every single thing that we do on that shopping list. They want to be able to pick payments and regulation, but they want to be able to deliver that coin to the customer themselves. And so what we're now in the process of doing is basically unbundling our product and ultimately making ourselves even more relevant to some of the exchanges. And in fact, some of the conversations that we've had is some exchanges have said, can we just work with you on licensing? Can you just run and manage our entire compliance department, run all the crypto licensing, both across exchange as well as custody? And when I say custody, I'm talking about actually holding people's coins. And so this product, you'll hear much more about this product over the next 3 to 6 months. The regulation piece is absolutely critical and will only become more important. And every time you see an article out there where a regulator has called out an exchange, that is great for Banxa business. Now, I think we've got time. We've gone for about 30 minutes so far. I've got a question from Adam. What are your NASDAQ aspirations? Adam, maybe once again, I'll take a step back. Firstly, I'll start with my view is Banxa ultimately belongs on NASDAQ. One of the reasons that we decided to list on the TSX was really a very good stepping stone from being a private company to public to then ultimately listing on NASDAQ. The beauty of the TSX, there's what we call a fast track process. Once we're listed on the TSX for more than 12 months, and that will be January 2022, anytime after that, we are able to fast track a dual listing on NASDAQ. And let's just say, I can't tell you whether it will be the first half or the second half. Suffice to say, it's on our register. In fact, it was only a couple of days ago that I had a meeting with US counsel starting to plan out what we need to do from an internal perspective to make that happen. And one of the benefits, other than being more cost effective, going that, let's call it the sideways route to NASDAQ as opposed to direct, we also get exemptions from Sarbanes-Oxley and other, quite challenging regulations specifically out of the US, which is great for a small cap company like us. So all I'll say from a NASDAQ perspective is certainly watch this space. Okay, I think we've got time for one more question. So if anyone has any questions, feel free to basically ask away. Let me just make sure I've covered everyone's question. James asks, just please refresh me on your revenue model. James, so we are a transactionally focused business. We clip the ticket. So our TTV is really one of the key measures, and then we effectively clip the ticket. We generate income by taking a percentage of that particular transaction. And in my view, when it becomes really meaningful for us is, and just to be clear, $200 or $300 million a quarter is nothing to be sneezed at. But for me, I see the opportunity in the billions. There's no reason why we can't be doing billions of dollars, not only every quarter, but also every month, and be able to then clip the ticket on those transactions. And the beauty of effectively what we've built is a model that is highly scalable and has a high degree of leverage. Whether we're doing 200 or 300 million, 2 or 3 billion, or eventually one day potentially 20 or 30 billion, we don't really need to add that many more people to the organization. And what we need to do is obviously add more customer service people, which we'll do in our customer support centers in the Philippines and Lithuania. But then at the same time, add more Amazon AWS services, which is hosting, just to basically do that. And that's effectively what you need to do. And that's the beauty of running a technology-based business. There is once we get to scale, there's a high degree of leverage. I think we've got one more time for questions. David asks, have you had any buyout offers? David, I can't answer that question. The question was, have we had any buyout offers? The answer is we've seen a couple of our competitors. So Simplex was one of our competitors, got bought out about 2 or 3 months ago. The end number ended up being $350 million US in cash. We, in my view, are a stronger business than Simplex. We have more payment methods. We have the off-ramps. We have more licenses. And if you want to look at it on a like-for-like basis, that would value Banxa at $7.70 per share. So I'm going to leave it at that. But just to kind of complete the loop, if one was looking forward and you were asking me to hypothesize, who would be the potential buyers for a company like Banxa? And obviously, if we get an offer, we will obviously be announcing that to the marketplace. But just let's talk hypothetically. I really put that down into 2 core buckets. The first bucket, in my view, would be the existing crypto to crypto exchanges. That would be one bucket. Could be one of our customers, could be someone who's not our customer yet. And the reason is, if you're a crypto to crypto exchange, you actually want to own not only the payment rails, the fiat on-ramp and the fiat off-ramp, you actually want to own all of those licenses. Because if I go back and talk about what does the gold standard look like, you basically need to have a license for almost every country you operate in, both across exchange and custody. That's where the world is moving towards. So let's call it the crypto natives as one bucket. And the other bucket would be the more traditional fintech players that want to get exposure to the crypto space without them having to spend the next 3-4 years building it. So we could be a very easy bolt-on to a number of different big payment service providers. And you only need to, for those of you that are akin to NASDAQ, there's a couple of big $100 billion gorillas listed there, and and effectively we could be that bolt-on. But my view is I'm less concerned about who's going to buy us out, and I'm really more concerned about building a strong business, providing fanatical customer service and customer support. And if we do that, and we do that right, then whether it's reflecting our share price or we get bought out, I think that's really the outcome of us doing a really good job. And that's part of the reason I come back to building the A team. If we want to win the gold medal, we need the gold medal winning team. So I think without further ado, I think we've gone through all of those key questions. I'd like to thank everyone for their time, and just to sort of let's call it sort of complete the loop. If you believe the hypothesis that Bitcoin, Ethereum, and this whole ecosystem is here to stay, then companies like Banxa, who are building a bridge between the fiat world, the existing financial world, with the new growing digital asset world, are companies, in my view, that will be able to survive and grow and succeed. We are very much right now the infrastructure, the fabric of the industry, and that's why I'm so excited, because in effect we're helping people move from the existing financial system into, in my view, this new financial system. And whether it's just in looking at getting exposure to Bitcoin, Ethereum, and these coins, or getting exposure to DeFi. And I can run a different session another point in time around the opportunities in DeFi. And in fact, we've already got one customer in DeFi that allows you to go straight from fiat into a DeFi coin where you can generate a yield, or now the growing NFT space. And we're now talking to a number of NFT players that allow you to go from fiat to NFT. I think you can clearly see, what we're basically doing, once again, coming back to our vision, is about making digital currencies, whether Bitcoin, Ethereum, DeFi, or NFTs, accessible to everyone around the world. I'd like to thank everyone for their time. If you want some more info, go to banxa.com. If you want to email me, dom@banxa.com, and happy to answer your questions. Thanks, everyone. And I will basically send this out as a recording very shortly. Thank you. Ciao.